What's your mortgage payment?
$3,250.
Oh,
$3,250? That's
Yeah.
a lot.
Oh, for
People on this show do
That's-
not usually have that much money for mortgages.
oh.
Everything.
Oh,
Caleb
this is
is
the definition of house poor. Maybe you don't have the money. Oh,
He might not be house poor. Maybe he makes a lot of money. We
you
don't know
said
that.
34?
I suspect he does.
3250 for
Oh, he's got out the calculator. He's got a calculator.
wow, it's 60%.
Running the numbers.
That's not a joke, man.
60%? He's paying 60% of his income towards just a mortgage payment?
That's literal dangerous.
Yeah,
that
that's
is
a terrible idea.
scary. And you don't need to be doing that in Dallas, that kind of percentage.
That's just such a terrible idea. If anything happens in your life and you're paying 60% of your income towards a mortgage, you don't have money. What if your car breaks down? What if you have to go to the hospital? What if something in the house breaks? You have no margin. 60% of your income, you can't invest for retirement. You can't afford nice groceries. You can't go out to eat. I mean, your whole life is built around the fact that almost all of your money goes towards a house. That is not a great place to be. So interest rates are essentially the highest they've been in a decade. Real wages took a hit last month. Housing sales themselves are actually falling. And through it all, housing prices are still near the highest they've ever been. So what's going on?
My mortgage payment went from $1,600 to $3,500.
16 to 35? That could be all of the money you're saving in a month is just gone just like that. It more than doubled. At that point, what do you even do? You have no more margin. You probably can't afford the house anymore. I guess you've just got to either sell the house or get a roommate. Presumably something was done wrong here. Like the escrow was wrong, the property taxes were miscalculated, or maybe she lives in a neighborhood that's like super up and coming and all a lot of like rich people or tech people have moved in recently, or companies have moved in, which is causing her rates to go up. And so her property tax was reevaluated. But doubling is crazy.
This is all I have been seeing going on my timeline on TikTok right now, on how everybody's mortgage rates are increasing. Honestly,
yeah, property tax going up.
I can tell you what, when I first bought my house and I had a realtor, my realtor did not tell me anything. I bought the house. I didn't know what I was.
No, that's on the realtor. A good realtor should walk you through every step of the process. There should be no surprises when it comes to buying your house, because that's going to be your house for presumably at least a few years. There should be nothing that catches you off guard. Their job is to make sure that nothing surprises you.
I was not a realtor then, of course. And I did not learn about my payment until the closing day. I did not know how much my mortgage payment was going to be until the closing day. And I signed on the dotted line. At that point, for me, I was ready to buy a house. So I just felt like
she didn't know her mortgage payment until the day she closed. How do you do things like budget or know if the house is within your affordability? That is a terrible idea. She says at that point that she was just ready to buy a house, which I totally get. Housing prices are going up faster than people's wages, so you're desperate to get into a house now before it becomes even more unaffordable. Absolutely understand that. But please don't do this. Get to a point where you're so desperate that you'll just sign anything to get in a house, because then you run into issues like your mortgage payment doubling and you're not ready for it.
At that time, when you're signing your papers, don't just sign the papers, just ask questions that you may have about your mortgage. Because once you sign and close on your home, that's your home. And then years down the line, you're looking at, you have to sell your home.
Yeah, absolutely. You're going to be stuck in that mortgage for 30 years, or at least you're still responsible for the payments on it. You can sell it and obviously pay off the house, but you need to know everything about your house and the escrow, the property taxes, city taxes, bills, utilities. I mean, just everything that having to do with the house and the payments and the mortgage, you should be fully aware of. It's kind of almost like getting married. You don't want to go into a marriage not knowing something about the other person. You want to be well aware of everything going on. There should be no more surprises once you get married.
I just got my first mortgage billing statement.
First mortgage payment on a $405,000 home, which, to be fair, is a crazy amount of money, but this is also pretty close to what the average home price is.
And yes, that says $2,919 is due. The
$3,000 a month? That is so much. That is close to how much most people take home per month. A household, like a couple or a couple with kids, that teenagers that also work, might take home more than $3,000, but individual people take home about $3,000. That's about what I was taking home after my first job, was a little under $3,000 a month.
Outstanding principal balance starting out with this mortgage is $364,500. That's a hefty amount. The first payment due is $2,919.17. That is also a hefty amount. It is double what we used to pay on our old house. And the principal due of
double what they pay. Hopefully they have good incomes and it's well within their margin, because doubling your mortgage, unless you have an easy plan to be able to pay for that, that can be pretty rough. We saw the other lady's mortgage was doubled and she was going to have to sell a house.
This payment, the amount that will actually pay down the loan, is $337.60.
That's not a lot.
Yeah,
there you go.
The interest due of this payment, the amount that will
The
go
interest is the rest. So the interest is like
payment.
$2,600. The reason that they put the principal amount towards the front of the payments and then it kind of tapers off, the principal amount becomes more over the course of the 30-year loan, is so that your payments are like even all the way through this. You can actually combat this and reduce the amount of interest you have to pay by putting extra money specifically towards your principal if you can specify that you're doing it towards your principal, not towards the interest. And even if you put, say, $100 a month extra on a $350,000 mortgage, which is about what she has, you're looking at about $35,000 saved over the course of that 30-year mortgage. $35,000, I mean, like, that's a nice new car, basically. Also, if you're enjoying this, I try to post almost every day, so I'd love a subscription. So when you see these interest rates and the payments that people are having to make in order to keep their mortgages, it makes you wonder, how does anyone afford this? And then you realize that a lot of people are like the first guy, where they're making huge, crazy payments on their house, such that they're unable to do anything else with their lives. And I get it. It sucks that you can't afford a house. I believe everyone is entitled to housing. But the way to fight against this is not by spending all of your money such that you financially cripple yourself. What if a pipe breaks or a tree falls down or your car gets hit by someone? You're screwed. And then you get stuck in a debt cycle. You have to take out a HELOC or a bunch of credit card loans or finance a new car. And those are like 25 to 30%. And even though this is a bad idea, and I think most of us know it's a bad idea, we have people every day choosing to take on these payments that they cannot possibly afford in the long term.
She calls me up and explains to me that she wants to sell her
Going from $1,600 mortgage payment to a $3,700 mortgage payment. This is basically exactly what the first person went through.
condo where she pays $1,600 a month and she needs more space. She then goes on to explain that
More space, understandable.
I helped to do the purchase for the condo years ago, and I look it up, and sure enough, I did. So we look at the condo, and I realize that based on what she owes and what she can sell that thing for now, she's going to walk away with about $40,000. What she has is
$40,000 isn't bad, but in terms of selling a house to be able to roll that equity into another place, it's actually not that much. That's maybe a 10% down payment, depending on where you live. And if she's in a condo, presumably she's in a city, which are probably more expensive. So that might not even be 10%, maybe 6 to 8%.
This is a very small condo. It's a one-bedroom condo in the city. It's only about 600 square feet, tiny.
Nothing wrong with
And I
wanting
ask
a
her,
larger
well, what
place.
price range do you want to buy? And she says, well, I'm really looking for maybe a larger condo or a townhome, but I still want to stay in the city, about $450,000. That'll give me enough room for myself and for my child. I'm like, okay. So we start looking at those
If she's a single mother, she says myself and my child, doesn't mention there being anyone else. $450 is a lot if you've just got one income. I'm not sure about
things.
that.
And I realized that with just $40,000 down, that payment's going to be about $3,500, $3,600. That her payment's
so
going to go up
much.
significantly, almost double. So I asked her, I was like, other than the equity from the condo, do you have any money you could put down on the new place? She goes, no, that's all I have. I was like, you have no savings? She says, no, I don't really have any savings.
This is a terrible idea. She doesn't have any other money to put into it. She's going to make less than a 20% down payment, so she's going to have PMI on top of that, and she has no other savings. What if she moves into the new place and then immediately something breaks? The plumbing, the wires, lots of things go wrong in houses all of the time. How is she going to afford that? They don't say that she makes a lot of money, so I'm going to presume that she doesn't, but $450,000 minus $40,000, so a $410,000 mortgage, that is a lot.
So at this point, I'm thinking to myself, well, if she sells the condo and we roll the equity over, where's this extra $1,600, $1,700, $1,800 going to come from? And so then I said to her, just asked her the question. I was like, that's going to be a significant increase in your monthly payment. Like, what are your thoughts on that? She goes, yeah, I know. I think I can probably get that done. And when I run the debt ratio, I realize that she probably can get approved.
She probably can get approved is what he says. And I realize that she probably can afford it, but then you're house poor. The very definition of house poor. If there's not enough money coming in, it's naive to think that over the 30-year course of the mortgage that you're not going to have something major come up. An ER visit, a car accident. I feel like I keep saying this, but it's not like nothing's going to happen in the next 30 years. Bad stuff happens to people all of the time, and you've got to be prepared for that. I get that 600 square feet is not very much, but unless you have the money to, you do not need to be doubling your mortgage payment to increase that. You're really setting yourself up for financial failure right now and also in the future. How is she going to retire?
How much does it cost to buy a $417,000 new construction home?
New construction,
Let's
so it's probably a little
use
extra.
a 5% down conventional loan that is 30 years with a 6.8% interest rate.
You probably would want to put more than 5% down just because of how high your payments are going to be if you do that little. 6.8%
down
for
payment
interest.
would
Ah, that's so
be
high.
$20,850.
Okay, 21K. That's
Closing
a lot of
costs
money,
would
but
be
it's
around
doable.
$12,510, assuming you budget for 3% of the purchase price.
32K.
This would make your monthly principal and interest payment $2,582.
2,582 is not terrible for like a 2 or 3 person household. That is doable if you have roommates or a spouse that can help you with this, but that's not including everything else. That's just principal and interest. There's, property taxes
Now,
and
what would your
other
monthly
fees.
payment be if you decide to escrow your additional fees? Let's assume your property taxes is
There it is.
$458 a month. Your monthly mortgage insurance is $174 a month. Your home insurance is $87 a month. HOA fees $192. This would mean your total monthly mortgage payment would be
$3,468, basically $3,500 a month. It goes from a doable amount of about $2,500 a month to a huge stretch amount of $3,500 a month. There's $1,000 of stuff that a lot of people don't account for in that. And I get it. You look at the payments that people are talking about paying and you think, wow, that's a lot. But you probably don't realize how much it is until you look at like the average income that people make. Well, this is from the Bureau of Labor Statistics, who track all of these things quite accurately. In the second quarter of 2025, the most recent data, the average weekly take home for a single person is $1,206. You extrapolate that out over 4 weeks and a month, you get about $4,800, which is not nearly enough to afford a $3,500 payment. And that's before you account for the fact that this is not including taxes. So if you take away 25% in taxes, you're taking home about $3,600 a month. Guess how much this costs? $3,500 a month. That's $100 for gas and groceries. So when you know that and think about these payments and the income that people have, it's kind of no wonder that house sales are falling. Because who is there that can reasonably afford these payments outside of, the upper 10% or so?
Do you think it's more of a seller's or a buyer's market right now?
I think it's still more of a seller's market, because even though we're seeing more inventory on the market, sellers are just not feeling pressure to sell.
Stacy.
That's because so many sellers have such low interest rates and they see the prices of all the other houses and realize how high they are. It's a lot to go from a low interest rate of like 2.85% to like a high interest rate of 6.8%. You are much more likely to just say, well, I'll just hold on to my house for a couple of years while I wait for that to go down. And houses cost so much. Even if you've got a lot of equity in yours, you're most likely having to downsize unless you are an empty nester with a lot of money.
Esser is a New Jersey realtor and founder of the Stacy Esser Group.
Yes, the closing is Tuesday.
She says a small
That was
shift towards
definitely a fake phone call.
buyers is coming.
Maybe house was taking 1 week to sell, and now we're kind of hovering at 3 weeks.
Part of the shift is driven by more houses on the market. Right now, there are 34% more sellers than buyers nationally.
That's great to see. It is about time people started refusing to pay such exorbitant prices for houses.
That's the most in more than a decade since Redfin started gathering data in 2013. But this is still considered a seller's market because while inventory is rising, so are prices.
Prices are still high.
That's because homeowners who locked in lower interest rates have little incentive to sell.
Why would you? You have a low interest rate, probably a low payment, and most likely your house is workable for another 3 to 5 years while you wait for interest payments to go down. There's no motivation that says you have to move right now unless it's like a job. And even in that instance, you can rent out your place.
In June, the median sale price hit a record high, nearly $400,000.
That's insane.
Anything that's updated and new.
That is a crazy amount, $400,000 for the median home price. That's only ever so slightly less than we calculated in the previous video, meaning the median mortgage payment is probably like $3,000 to $3,400. That is a lot.
New and turnkey are seeing the biggest increases. Anything that's in that entry level price point is also seeing the biggest increases.
And that's the worst place, because entry-level housing, that's lower income people who are getting into housing for the first time. Someone, maybe just out of college or someone who's been saving up for a long time at a lower income job. To be unable to purchase entry-level houses is really bad, because then you're stuck renting for a long time and you don't build any equity while you rent. When you retire, if you need the extra money, worst case scenario, you sell the house, move into a condo, someplace smaller, an apartment, if you absolutely have to. But if you've been renting your whole life and you need money, well, then that's that. You just don't have it.
It comes down to location. Austin, Phoenix, and most markets in Florida are better for buyers because there's more inventory, while Newark, New Jersey, Long Island, New York, and suburban Philadelphia favor sellers because there's less inventory.
There's also notably a lot less regulations in those places, the first ones that they talked about. You can see here where she said, oh, there's a lot more inventory here because in these places they tend to be more conservative, so they don't believe in government regulation in a lot of things. And as a result, companies can go in and build a lot more easily. So a lot of companies go in, build houses, and then sell the houses off. Whereas places that she talks about here, like New York and New Jersey, there's a lot more regulation, which means it's a lot harder and a lot more expensive to build. You got to get permits, then you have to do like environmental stuff. And when you actually do a construction, a lot of these cities require you to sell at least some of the houses to low income people for a really low, usually at a loss. And on top of that, you get NIMBYism, where people don't want houses built there because they don't want their area to get more crowded, or they don't want their views of the oceans blocked. And so they refuse to let builders come in by voting in city council members that'll stop that from happening. And as a result of that, the housing supply doesn't go up, so just the cost does. And don't get me wrong, regulation on housing can be good. You have to think in like Florida, they had a problem with condos falling down because there was no regulation saying that the buildings had to be inspected. People died because of that. But then there's the opposite extreme in places like California and New York, where regulation is so rampant that nobody can build anything. And as a result of that, prices are going sky high and people are going homeless in record numbers. And as a result, actually leaving both of those states.
Favors sellers because there's less inventory. Servan Icevik and her husband own a salon in a competitive location in New Jersey and say they've been looking for their first home for more than 2 years.
How competitive?
2 years? That's brutal. I'm sure people are coming in and just pricing them out of the market. If you've got a rich person that wants to move to New York, maybe the average price is $600,000 or $700,000. But if they want to move there and they're rich, they can pay that, which means that normal people, even if they've been living there for a while, they just can't afford those prices.
Have you found some of these houses that you've put a bid on?
Last week I just offered one house. They couldn't accept my offer because of they said that 19 people offered that house. When I heard
19 other people, and you know at least one of those 19 people has a lot of disposable income and was willing to offer more than the seller was actually asking for.
Like 19 people, I couldn't believe it.
To improve your chances of homeownership, put an offer on a home that's been sitting on the market. The owner might be more willing to negotiate.
I mean, maybe, but if it's in a high demand place like a big city, I mean, you're just not going to see home prices come down that much without more homes actually being built. So prices are so high that it's hard to sell a home because a lot of people can't afford it. But a lot of people also bought homes at high prices and they don't want to take a loss on them. And in addition to that, people have been told that homes are supposed to appreciate. So if you think your home's been appreciating at, say 10% for the last few years, but then you can't find a buyer at that new appreciated value, then you don't want to sell it because you feel like you're losing money. And this has led people to do something interesting that's being called accidental landlords.
To sell a home with persistent high prices, high mortgage rates, economic concerns weighing on the consumer. So sellers are trying a new tactic that could have a big impact on some investors. Diana Olick has the details in today's Property Play. Hi, Diana.
Hey, Morgan. Yeah, frustrated sellers reluctant to lower their prices anymore are instead putting their homes up for rent, so-called accidental landlords. And there are so many now, they're actually starting to affect rental supply and the big institutional landlords.
This sounds like great news to me. So many individual people are putting their homes up for rent that like large renting companies are losing money off of it. That is awesome to hear. We absolutely need to get big corporations out of single home ownership. I am not going to cry over the fact that Blackstone is not making all of the money that they think that they're entitled to.
The largest investors owning more than 50,000 homes are highly concentrated geographically. Invitation Homes, American Homes for Rent, and Progress Residential each hold over a third of their assets.
And they've got them in big desirable cities. Phoenix, Tampa, Houston, Dallas. This is where people want to live. And if they own all the homes there, that just drives the price up.
Assets in just 6 U.S. housing markets, according to Parcel Labs. These markets have seen rental inventory growth of well over 20% in the past year, much of it from former owner occupants, like Garrett Johnson, who bought a home in Dallas 2 years ago but was recently transferred to Houston. He tried in March and April to sell his home, dropped the price a few times, but crickets. So he decided to rent it and immediately got several offers.
It's honestly not a terrible idea if either you think maybe the value will go back up or housing prices in general will come down so people are more willing to look for houses. Just rent it for a bit at your mortgage, so you're not trying to look a profit off of this, and then just wait it out and see what happens.
I expect to hold it until the market recovers, whenever that is. I don't expect for it to recover super soon. So, the expectation is that it'll be several years.
And I'm actually okay with this. He didn't go into this with the intention of enriching himself or price gouging people just looking for a place to live. He just basically doesn't want to take a loss or wants to take a slightly bigger gain on selling his home. And I know people that have done this. They rent out the home and then charge what the mortgage is while they wait around to just see what their next steps are with their house. And on top of that, them charging lower rents forces other large companies to lower their rents as well and hurts their bottom line, which I am absolutely.
The concern for the big investors, according to Mizuho analyst Handel St. Juste, is that the big landlords who have been getting 4 to 5% rent growth in their renewals and 75% retention in their portfolios won't be able to sustain that. Those big landlords have already become net sellers of individual rental properties and are instead turning more to the build-for-rent communities. Now, this is just one of...
Good. We need to get big people out of single-family homes. I'm fine with apartments, duplexes, triplexes, multifamily homes, but we do not need large corporations coming in and buying up single-family homes. Let the single families have that. Things get bad fast and better slow. But I think we're starting to reach a tipping point where things will start to get into the better slow side of stuff. And I'm hoping that one of the things that gets better slowly is the affordability of houses so that people can return to the American dream and owning where they live. Thanks for watching.